Hi, good day to your traders. This week I managed to capture a very interesting trade. This is one of the trade I've done in Euros futures between 18 to 20 of June, and this is actually a failed breakout pattern. And this will be interesting because many of the traders has always been asking, how do I trade a failed breakout patterns? As they know, failed breakout patterns are more powerful than breakout patterns. So let's say, for instance, now this is a price action that has really made a huge down move on the markdown phase, and what it has formed some sign of reversal, and it has formed a double bottom pattern, or some people call it the W shape. So now when it forms a W shape, what we can see is that we know that most traders recognizes this pattern right here. This W shape right here usually is a very bullish pattern. And as if the price breaks out from this area, then traders would want to buy in from here and ready to take their profit around this area. All right. So, now because when you see patterns like this, sometimes it's not that straightforward. If you see a pattern like that, okay, but get ready to just look from it at the sidelines of what happens. Most of the time, it's not that straightforward. Right. So let's say now the price has already broken above this neckline, which a lot of people call it. It's actually a resistance. A lot of people call it the neckline. So the entry rule is that when it breaks above the neckline, then they buy into this bullish candle right here, and it also breaks above the moving average. So this is where a lot of traders comes into the play, buying into this pattern, and they'll place their stop loss below the significant support level, and those who are more aggressive would actually place their stop loss below the neckline, and most of them will place their target profits around that area, just right before this significant resistance right here, this area. All right, before the price turns against them. So now let's get back to this area. To the trade. So let's say, for instance, as price develops, so what we can see is that the price did not actually go further up, and it starts to come back and retest the neckline. And what we can see also a large volume of retracement traders has been waiting at the neckline to take the trade, to take a bullish trade right there. So, but what it seems to look like is that when you see a lot of wicks in this area right here, now it looks like someone with very huge volume is defending this price area, preventing the traders who are going bullish to take their profit up here. All right, so there's some defense mechanism right here which is working against the traders who are going bullish. Right. So what is happening right here is that, see, the professional traders has placed their sell orders here to block the bullish retail traders from actually taking their profits, to make them stay in their trade longer. All right. So, all right, those who have bought in around this area. Then, of course, and as the price develops, it starts to move down below the neckline and taking out a group of stop losses right here. The ones who are more aggressive will be the first one who will be taken out. Right. So as the price continues to go up bullish, and of course there'll be more retail traders joining in to this bull run, and there'll be more stop losses as well. So what happens is that the prices that level that the professional traders are defending right around these levels, is they will prepare to actually take out the stop losses of all the retail traders who have brought the price up in this area. So what happens next is that there's a huge red bearish candle, all right, going right all the way down to all this to actually bridge through all the important support levels, taking out another group of retail traders stop losses. So this candle is meant to take out stop losses. So it's a stop hunt candle, some of them call it. So the strong flushes downwards are a sign of accumulation, and these are actually meant to hunt stop losses. Before sending the price higher on the later part. So this is just temporary when it happens. All right. So now, of course, when this happens, and this is a very clear breakout pattern to most of the traders who are going bearish right here. So as the candle breaks out from this significant support right here, more of them will be joining in, selling at market price around these levels. And as the price retraces back to this significant resistance level, and they'll be also placing sell limit orders right there to actually try to bring the price down on the later part. All right, so let's observe a bit more what happens next. So what happens next is that the price starts to bounce around that area in the resistance area, and it looks like the price did not manage to get lower after a certain amount of time. And this also actually means that someone is actually placing a floor. Is actually placing a floor right here, right at this level. It's like a sponge. Buy limit orders are placed here, absorbing most of the sell orders right here. All right, because this is a very liquid area. Because when traders see long red candle, retail traders see long red candles, they'll start chasing into this candle and they'll sell into this pattern. Because they'll think that this is a breakout pattern, they'll start selling to this pattern, and professional traders will be waiting around these areas, all right, to take the trades in. So as the bears and the bulls are fighting, what we need to observe is the price on the later part as it develops, which direction it's heading. So what we can see is that the bulls are actually advancing, they're getting stronger. The bears are actually getting weaker as time goes by. So what we can see is that if we take away all those arrows, what we can see is that price has managed to break above these levels, and it retraces right here, and there's a huge bounce upwards. All right, this is a strong bounce, I would say, because immediately when the price comes and tests at this level, it starts to get rejected, and it forms a pin bar candle right there. So now let's see what happens next again. So, all right. So as the price starts to develop even more, and it comes back to retrace, and this is where I would take the trade, because the pattern has actually failed in going downwards, failed breaking downwards, and comes back up again. And this is a very good time for me to take in a bullish trade at these levels, actually this level right here. So all right, I will place my stop loss somewhere around here. All right, just below this structure right here, so that when the price starts to develop, I would anticipate it to go a lot higher, because it has done a lot of accumulation right around these areas. All right, because a lot of retail traders are selling into that pattern. Right. So now let's see what happens if it continues. Right. So we know there's a retracement right here. And as soon as it starts another retracement, then the price starts to surge upwards. Now, you might want to ask, and why is this happening? There's a huge surge in price. And what you can see is that you can see this candle here surge up very high, and why this is happening, right? So remember the traders who have placed their sell orders right here. And of course, there are more sell orders around these areas, but of course their volumes are getting lesser and lesser as time goes by. So you see it extended right around this area, so some more sell orders are coming into these areas as well. So but the volumes are actually fading, so the bulls are advancing, and then it starts to actually break out. All right, break on the upside instead of downside. And okay, so those place their orders below this support level or resistance. Their stop losses are right around these areas. So it doesn't take much for them to be blown away or actually taken out. So once the price level touch them and then they get stop out and it generates a very huge momentum. It's like a momentum trigger when the price touches those the green zone and that area. So it's like a dynamite waiting to be exploded right around this area. And this is very often it generates a lot of when you see a huge burst of price here, and many more retail traders are joining in to actually chase this green candle, and professional traders will be waiting around this area to get out from the trade because it provides them a lot of liquid. Imagine what they've done is that they've bought around these areas, they've bought around these areas, they bought around these areas. So you see, imagine if they bought a lot at these areas because this is the most liquid part as the price breaks out at this area. So a lot of sell orders were placed right around these areas where they're absorbing right here. So imagine if the momentum triggers here, taken out all the traders, retail traders stop losses, they would be actually having these gains right here. So this is a very huge gain from this area to this area. So this is where they can get out from a trade, with a huge percentage of their capital actually. So okay, so as price develops, and you can see this red candle, there has been a huge profit taking done at that area. But of course, this is a very bullish pattern overall, and price continues to break important levels and starts to go up in the markup phase, right? So this is the actual trade that I've done, and of course I've entered six lots, six lots over here, and know that there's going to be a very big move, even though there's a price surge up here and there's a lot of a profit has been taken here. So I would anticipate the price will still continue to go further up. So this trade has actually been contributed actually about 4.5 R into my portfolio. Of course, at this point of time here, anything could happen. The professional traders could just flood the market with a lot of sell orders here to take out some of the retail traders before sending the price upwards. But in this case, it's a bit quiet, so they just let the market, to slowly take the price upwards. All right. So, and of course, if you look into a bigger picture, this is a very nice rounding bottom pattern. So most people would anticipate the price to break out over here before they take the price higher. All right. So yep, I've also taken actually a bearish trade right here on a bull trap. So, but we'll not go into that. So we'll just focus into what we have done here. Right. So as we speak further, and when we see huge red candles, be like a professional trader, prepare to be bullish. And this is the part where I see a lot of accumulation has been done right here. So I call it a stage accumulation. Right. So thank you for watching, and happy trading and investing. See you next time.